Welcome everyone, I'm Fausto Carnevale, international tax consultant, and in this video I'm talking about Italy and in particular the source of income that you have to avoid when you want to move and to be more specific, when you have in your mind to retire in Italy. So before I start the video, I need to talk about the double agreement that normally in every country we can find a document that states how we need to read the taxes if a person, for instance, live in Italy or in one European country, and that person have other sources of income from another country. So even if you don't want to have a consulting with us or with your accountant, I will invite you to read the double agreement, the treaty between the countries, if it exists. So, because for instance, in Italy, Belgium, they state how to treat the dividends, rent, money from other sources, etc. So, first thing is, what is the sources of income to avoid? Why I'm saying this, sources of income to avoid? Of course, you don't have to avoid the sources of income. But today, I'm talking if you live, especially if you are from United States or Canada, because unfortunately, if you retire in Italy and you have one company, which you can move to Italy and have one company, for instance, in Canada, if there is one reason, for instance, if you have a real estate company or you produce something, you can, and then imagine that you retire in Italy and you have a public pension or your private pension or both. What happens if you want to take the dividends also? Because in America, it's quite normal to say, okay, I will leave, now I built my company, I built money, I built asset, so now I'm taking out the dividends, which I hope I can do also when I will retire in Italy. Remember that I will retire in Italy, even if I travel a lot. You will see me in a beautiful villa, maybe in my region when I will retire. Who knows? And maybe I will make some video from there. So, dividends. Dividends, capital gain. So, capital gain. But of course, we are talking about if you withdraw this money. So, dividends, you know what is a dividend? Imagine that you take a dividend out. You have invested, let's say, in the Standard & Poor 500. You have 10,000 euro per year in dividends that you take out. Okay. Imagine also that you have this Standard & Poor 500 that make 10,000 in capital gain because they reinvest, or it is simply a capital gain because, as you know, the price of an index grow normally, especially now. The Standard & Poor did very well in this month, November 2024, sorry. So imagine that you say, okay, good, I will live off my dividends. Okay. In Italy, you have to pay the 26% of taxes. And by the way, I will invite you to watch the video that did Andrea regarding the crypto, because the crypto, I'm not talking about this because the situation is getting very bad in Italy for the crypto. So 26% of taxes. Okay. What if instead but the question is of this video, why to avoid this 26%? Because if you read the double agreement, the treaty, you might find that in your country, they also want a percentage. And we did a case for Canada, a Canadian man who was moving, is moving to Italy. So he had a company and he was wondering how to take dividends, okay? So for the Canada, and this applies for a lot of countries, Canada wants the 15%, even if you live in another country, in Italy. Okay? So let's say that for the sake of this video, he had 100 or 10,000 euro of dividends. Canada wants 1,500. And Italy, because this is quite strange, because here we are almost talking about double taxation, but it is like this. Italy, on the remaining 8,500, which is also called netto frontiera, basically is what arrives in Italy, 26%. On top of this, so you can do your calculation, take your telephone, no? So you see that dividend is the worst way to take money in Italy. But you can always say, I can have a brokerage account, but I take out the money only if I need this money, because you know how the taxation is high. A different solution that maybe we can explore in the next video will be to sell your company and to buy a company in Italy. A real estate company, or you start to buy apartments. Because in this case, you can save some taxes. And here, you see, in this case, you pay more than 30% of taxes. So quite a lot on your dividends, right? We try to minimize the taxes. Italy is not Dubai, but with the good strategies, we can go around 20% legally. So if you have any questions, you can send us an email at info@esentaxa.com. And if you want a specific tax simulation, which I'm doing every day for clients from the United States, we can compare also two countries, I don't know, let's say Italy and France, or I don't know, Italy and Switzerland. You can book a free call and we can create an offer for you, okay? Because before moving to Europe or before moving to another country, it is very important to understand the tax pressure. So until next time, Fausto Carnevale, I hope that you will choose wisely your country.